Darren. My name is Dana, and I buy and invest in real estate, and we're always, refinancing, buying, all that kind of fun stuff. So I was looking at your DSCR loans
Mm-hmm.
and wanted to find out what, ratios you utilized, what you guys were looking for as far as loan packages.
Mm-hmm. So, okay, so what state are the properties in that you buy and that you are investing in?
We own Alabama, North Carolina, Ohio, Michigan, um, Florida,
Okay.
Pennsylvania, really more
Okay.
like up and down the East Coast.
Okay.
Not
Those
really
are all fine.
Texas, but we're kind of looking at Texas now.
Mm-hmm. Mm-hmm. Okay. All those states are fine. I just want to make sure licensing.
Are they?
So,
Okay, cool.
yeah, they're all good. So let me give you just a 2-minute overview on the market, this market, the
Okay.
DSCR market, because it's more focused than
Mhm.
what all these loan programs are. What I mean by focused, it's so the requirements are not just our requirements. I'm going to give you the general requirements, and there are some
Okay.
between lenders. There are some little nuances as far as how you
Right.
qualify one. So that's really the trick. So these loans, for the most part, as far as the loan to value ratios, so when they
Mhm.
debt service, and we'll talk about that a little bit. When they debt service, it's usually up to 80% loan to value. The trick is
Okay.
usually, depending on the state and the location, very rarely do we see them at 80%, even though we offer them. It's generally 75%. So if they debt service, and so on all the DSCR loans on a purchase, we'll talk about those first, it's based on
Mhm.
the market rents. So the market rents are decided by an appraiser's market rent survey. So ahead of time, we always look at what we think the rents are, and we ask the
Right.
borrower what they think the rents are. We kind of back into it that way, but we don't know on a
Mhm.
purchase until we get the appraiser's rent survey. So that's the moving target. So the only pre-qualification
Okay.
is credit, middle credit score. If there's several people on an entity on these type of loans, they want all the people on the entity to qualify for the loan, and we take the lowest score. So they're different from private money loans when they'll
Even if
take
it's like
one person.
1%, if they only own like 1% of the LLC, is it, or is
If
it
it's
like 20%
1%,
or more? Or?
yeah, there could be. So just if it's 1%, then yeah, certainly there could be some leeway, I think, in not having that person on the loan for sure. But in
Okay.
general, all DSCR loans require anyone on the entity to sign on the loan. So there
Okay.
are other types of loans in the market. We offer another product. I don't want to confuse things yet. It's a no DSCR loan
Okay.
that acts like we can use one person on the entity and sign on behalf of the others. So that's just the way DSCR they're sold. These loans are sold into securities, and that's the way they're all kind of structured on that. As far as the title can be
Mhm.
in an entity, but they want all people on the entity to sign on behalf. So the moving target is the rents. We don't know what the rents are on a purchase until or what we can use. So we're pretty good at we're not perfect, but at estimating whether we
You're not
think
perfect? Okay.
no, but we're pretty good. We get it 8 out of 10 times right, but and we
Mhm.
rely on local realtors and all that, and some online stuff, systems that we use. But putting that aside, so DSCR loans will allow some negative rents. So the best rates are when it's 1-to-1 or better. Then if it's
Okay.
negative, they'll allow 25% negative, usually a quarter
Really?
to 3/8. Yeah, 25% negative, but the rate's going to be anywhere from a quarter to 0.375 higher than when it debt
Right.
services. So you have a couple
Mhm.
levels here. So one level is when it debt services. One level is when it's negative and the rates are going to be a little bit higher. Then you have another category that's a no DSCR loan. When we see that this property just won't debt service or there's other issues, we
Mhm.
have other products that are also 30-year fixed rate loans that will just look at the middle credit score and the loan to value. And on those, the no debt service up to 75% loan to value.
75%. Okay. And those are all on purchases.
Those are so on refis you can still go up to on cash out refis you can go up to 80, but rarely do they debt service. So generally we see refis cash out. You can go, so what we normally see is 75% up to cash out on them. Generally speaking, after you buy the property, if you're fixing it up and to use current value, it's 6 months of seasoning. From the time you purchase it to the time you refinance it, 6 months of ownership to use current market value.
Okay.
Now I have a product. The rates are higher that will use current market value. After you close, you fix it up in a month or two, you want cash out. I have another product that will do it, the no DSCR, but the rates are higher.
Okay, gotcha. And what are rates running right now for a typical deal, just because they're all over the place?
So the way it's all over, it's only based. So DSCRs are based on middle credit score and loan to value. The lower the loan to value, and the higher the FICO score, the lower the rate. So those are the two components of a rate. So a low. I'll give you a low example, right, and then I'll give you a medium and a high. So low is right now I have a client that's refinancing, and refinancing generally is going to be about 0.25% higher in rate than purchases, just because of the way they measure risk. And so refinancing cash out at like 60% loan to value, 800 credit score. He's at 7.25%. That's a low. 7.25 is a low. If you're buying a property and you're putting 25% down and you have a 740, 760 high credit score, you're going to be looking at something like 8%, somewhere in there, maybe 7.99, something like that.
Okay. And then as far as purchasing, what is your lowest program that you have for down payment? Is it all 20% or
it's all
15%?
20. There's not. It's not that I have. It's just what the market will bear, right? So we deal with every major investor in the marketplace. So it's 20. The minimum down payment, to answer your question, is 20%.
20%. Okay.
On all DSCR loans, no matter what.
Okay.
And again,
all right. Most of our stuff would be refis.
Refis, you can go up to you can go up to 80, but once again, if it debt service,
I've never seen it either. Everyone says that, right?
I don't put it out there like that. I don't do that. We're pretty straightforward with people, and so everyone's going to tell you, we can go to 80, 85, and they're going to tell you all that, but they never debt service. So why even say it?
Right.
I do loans all over the country.
You never get it.
You never get it. So why tell people they can
get
it? So I don't do that. So we're pretty well connected, as far as these lenders and how we operate. We deal with, first, everybody wants the lowest rates, so we know we can offer the lowest rates. As far as our processes and our systems, and how we handle things, all loans are pre-approved up front based on credit, income, on purchase, liquidity. And so then the only moving target after a pre-approval is only 2 days. The only thing that's a moving target is the rents. It's always what are the rents.
Unless it's a refi and you already have it established. So what happens if you do have it established already and they've been paying it for a year?
So so the rents that are established, there's two things that happen. So there's two variables, right? So most lenders will want the lease, and if you're going to use the actual rents, let's say the actual rents are higher than the market rents that come in on their appraisal, you can use the actual rents over the lower in a case where they were lower. We'll do both ways. Where the actual rents are higher, they just want to see proof that you're receiving the rents, 2 months of bank statements where you're depositing in the bank. Now let's say if the market rents are higher, and we'll use the market rents.
Right. Okay.
We can just use.
And then I see you have a
40-year.
What is the 40-year AM and interest only?
So the way it works, and so all DSCR offer this term that's 40 years. So It's a 40-year term. Interest only period is 10 years. So the first 10 years, interest only, then it converts to a fully amortized loan for the remaining 30 years.
Is the interest rates quarter point higher, or what are?
No, it stays the
Because
same.
every time I've tried to look at interest only, it's never worked because it just didn't do much.
It does.
With
If
other
the
people,
loan
you
amount's
know what I
high.
mean?
If it's a low loan amount, no, it doesn't. We don't sell it. Like if it's 200, 300, even 400, we don't sell them. You know, but if the loan amounts are higher, you could see a difference in the payment, but not on $200,000, $300,000, $400,000 loans. We don't usually sell it.
Right. Exactly. Okay. Got it.
No, but it's available.
And then do you do any O&O?
Let me go back
do
a
you
second.
Do any owner-occupied?
Sometimes, yes. Sometimes the debt service is a little off, and if we just switch it to an IO and it works without bumping the rate and doing that 25% negative, we do that. So in some cases we will offer that. But owner-occupied would, well, first of all, you can't do stated income or no income documentation with owner-occupied. It's against the law after the subprime crash.
Right.
So you have to on owner-occupied, we specialize in another program, and it's on our website. Bank statement loans. You might have heard of them for self-employed folks.
Yep.
Yep. So that's we do.
I'm looking at it right now. Okay.
Bank statement loans. So on
bank statement,
you can go ahead and take a look.
Yeah, I'm looking at it. So on your bank statement loans, that's obviously 20% down. It's not like you have FHA bank statement loans.
You could
do 10.
You could do 10% down with the bank statement.
10%. Okay.
Minimum 10% down, owner occupied. But the way rates are right now, there's like almost a full percent. The minimum down is the highest rate, so it's better to put 15% down. But we do 10% down, minimum down payment.
Okay.
Very popular.
Yeah, because ours would be a jumbo.
Folks. Yeah, but if your business is real estate, it's hard to So it's kind of we do real estate investors on bank statement loans, but it's a little tricky because it's not like a traditional business, right? So, there's some little nuances about it, but we can do it.
Okay. Well, depending on what kind of real estate, right? Is that what it is?
Yeah, because you have income coming in, and then you have a mortgage, right? Principal, interest, taxes, and insurance. So it's kind of tricky. We don't qualify it the same way as someone owns a business. So. Yeah, but we can do it, yes. And it depends on what type of real estate, how we derive the income. So it could be done.
Okay. And then what is your... Go ahead.
No, go ahead. I'm going to let you ask.
What is the package we need to put together for you, like on a refi DSCR loan? Like, what do you guys like to... Well, basically,
just on a refi, you tell me the property address, what you're looking for, what the first loan balance is, what the rents are, those type of questions, and then I can take a look and see what I think. You can tell me what your credit score is, and then I can send you a quote, and then with the rate and cost, and then it's pretty straightforward. So what I need is property address, credit scores of who's going to be on the loan, loan amount.
And we work with trusts or no? Does it have to be an LLC or trust?
The LLC or trust we can't take title in, so. So our title company, First American, they'll take it out of the trust and put it back in for you after you close.
I gotcha. Okay. That's what we've done in the past. Okay. Okay, perfect.
So
and then
property address, estimated value of the property, when you purchased it, credit scores, what loan amount you're looking for. Those are the kind of questions I would need to give you a quote.
Okay. And are they using FICO 2, 4? What are they
middle credit score.
Utilizing?
The middle credit score. So we run all three.
Do you know what they're utilizing? Okay.
When you say
do you know what model they're going on?
It's a mortgage credit
Well,
report.
there's different models, like FICO 8 or, okay.
It's just a standard, mortgage credit report. I don't, the technical number, I've been doing this forever.
Okay.
I don't know. But it's a standard mortgage credit report.